Hey everybody, welcome to the morning market briefing. It's Thursday, July 23rd, 2026. Hope you are doing well out there. Ben, how we feeling?
Man, we got a lot going on.
Lots going on. The Houthis are targeting ships in the Red Sea. Trump says he's going to hold them accountable. They're going after commercial ships. I mean, it's just chaos out there, man.
Yeah, so they targeted two ships, the Houthis, opening a new front. They targeted a refined products, both under the Saudi flag. Refined products tanker called Encelia. The other vessel was called Layla, which does crude oil, both again with Saudi. Trump has said that every time Iran targets a ship, he's going to destroy one bridge or power plant. So we'll see what happens. Rubio has warned the Houthis to stay out of it. We'll see what happens. Trump was here at Wheeler High School yesterday.
Yep. Trump made the rounds. I cannot quite figure out why it was Wheeler High School. Not that there's anything wrong with it being Wheeler High School, but pretty random spot, to be honest. I think they're doing like a massive renovation of that building. So maybe it's done. I don't know. I could be off. I just know that I drove by not long ago and I thought to myself, will this be ready for school?
The image of the gym did not look bright. It wasn't a bright venue.
Yeah, Wheeler is a basketball powerhouse. Jaylen Brown, who's been in the news, famous Wheeler alum. Sharif Abdur-Rahim, Wheeler alum. Lots of NBA guys. So there you go. Maybe he just wanted to pay his respects to Jaylen Brown. Uber cutting 10% of customer service jobs. Who's most impacted by this?
I don't know. I didn't know.
What are they doing?
I didn't know Uber had customer service jobs. I guess
anytime I have a dispute, it's just like an app, and it's like,
which is probably
refund.
why they're customized. Yeah, they're firing. I am waiting for the announcement. They only have 34,000 employees as a firm, Uber. I think there's more headline grabbing. Usually, it is weird that you announce a layoff like this when you don't really have to. It seems like companies don't really enjoy doing that. So I don't know how many jobs are effective, maybe 10.
There can be many. I'm
waiting for the announcement when they start laying off Uber drivers.
Yeah, it's going to be,
again, that's a huge potential thing with, and we'll talk about it later, but robo-taxis and self-driving vehicles.
Yeah, when we talk about employment pockets that are ripe for disruption, that's certainly one that seems like that's coming. With all this uncertainty, the 30-year rising, hitting essentially the high that we saw back in May. It's choppy times out there.
Like I said earlier, this is not an issue. The current oil markets are not an issue of people filling up with the pump. It's frankly, I don't think it's an issue for consumers. I mean, we have consumer spending that is doing very well, although don't ask Albertsons. Albertsons down almost 20% this morning. But in general, consumer spending has been very good. I don't think that gas prices are really that much of an issue, the issue that they once were for consumers. But I do think it's a real issue for the national debt and therefore the American taxpayer. Because again, if we're paying 5.25% on the 30-year, when a couple years ago we were paying 1.9%, that's 3.5% difference. Which again, 30 years, not the entire issuance right now, but even if you say it's 200 basis points higher than it could be with normal oil prices, you're talking about $800 billion savings on the deficit, which almost balances the budget.
Yeah, and you think about the distribution of issuance in the past when those rates were low. Man, I wish we had more long stuff that was issued back then.
Mm-hmm. Yeah, I mean, can you imagine if we had everything that was locked in at 1.9% versus now we're chasing it and we're really, really killing not only the current American taxpayer, but the kids and grandkids the longer these rates stay up. So rates need to come down, if not from a housing standpoint, and I know we've talked a lot about that, but from a deficit standpoint, we got to get those rates down, and it could save us to the tune of $1 trillion on the deficit a year if we do it effectively.
Yeah, and it's really no different than the housing thing we talked about even yesterday, the sticker shock, maybe earlier this week, but the sticker shock of people getting kind of reacclimated with higher interest rates, hopefully at some point coming back into the market. The same is true on the national level. If you're confused as to why the prevailing interest rate matters, it's the same thing. You might have liked a house at a 2% mortgage. You probably don't like it at 7%. Same's true here. If we can get that down, it's helpful to the household budget that is the federal deficit.
Yep.
ECB is going to maintain their rates at 2.25%, but says that they have yet to see the full impact of energy inflation. Ben, why are they operating? Why are they making that claim?
I think they want to appear that they are being sensitive to it. I think there is this theme. If I give them credit, I think the credit that I would give the central bankers right now is you talk as hawkishly as you can because you're petrified about long rates going up higher. And so if you talk hawkishly and keep the short end rate up, you can kind of, it's like a teeter-totter. Like you push you lift up one side to keep that other side down a little bit more. And I think that's what, if I give the central bankers credit, especially I think Kevin Warsh gets this. I think the Europeans are kind of just following, kind of like blind mice. But I think the end result is the same, is that they want to maintain or keep the long end under wraps. Because if that thing spirals out of control, this thing could unravel quickly from a debt standpoint. And I think you'll probably see more headlines on that in the coming weeks if the rates don't go down.
Yeah, we'll get to lots of earnings here in just a moment. But Scott Bessent stirring the pot, trying to oust the vice chair of bank supervision, essentially blaming him for the Silicon Valley Bank collapse.
I watched Michael Barr in an open forum meeting when they're actually reviewing the bank rules. And I've said this before on the call, but I was thoroughly impressed by the level of work that the staff did in presenting all the Fed governors with the correct data on how they should think about capital rules and regulation and supervision. Michael Barr didn't show up. He zoomed in. Jay Powell, to his credit, was engaged. He was listening. He was asking good questions, and I think he was open to hearing his mind being changed. Michael Barr clearly didn't listen because I didn't have any context. I wasn't briefed beforehand, which Michael Barr was, allegedly, and he was asking such pedantic questions that were already answered multiple times. The staff was almost exasperated, saying the same thing over and over. And I think he is an ineffective. He either doesn't put the work in, or he's just not very bright.
Yeah.
And I think it's probably the former rather than the latter. And I think that Bessent has picked up on this, and I think Bessent wants him out. We have a lot of people who have never really done a lot of work, who are in positions of great power in this country, and I think Bessent's trying to clean it up. The problem is when you're in there, and then it becomes, he's attacking Fed independence. He's not attacking Fed independence. In my view, and I feel strongly about this, he is attacking Fed incompetence.
Yeah,
there's a big difference.
Yeah, a different approach there. But do you buy anything in the timing of this? It's why now? I mean, we keep asking that on so many things.
I don't know about, and it's a good question. I don't know. Maybe Bessent's talked to some of the other bank leaders. Like Jamie Dimon is not a fan of the bank supervision. I know Scott Bessent talks to him. Maybe it's just kind of all blown up. Scott Bessent's 3% deficit, 3% GDP growth and stuff. That doesn't seem to be working right now, in part mostly because of the war and the effect on interest rates. And so I think Bessent's trying to create value in other ways, and this would be a way to do it and unlock the banks to lending and things like that.
Clean it up a little bit. All right, let's jump into earnings. Lots to get through. If you were to take just yesterday's reports, and there were quite a few, Alphabet, ServiceNow, Texas Instruments, from the AI standpoint on this narrative, how would you kind of digest what these guys are saying?
Yeah, so the way I kind of characterize this is there's really 4 buckets of the companies that reported. I mean, I have 7 pages of notes just in here on these companies from this morning. So there's 4, and I was almost going to do it in quadrants, but then I couldn't think about the quadrant of companies that just not involved in AI
Mm-hmm.
and executing well. But you do in quadrant 1 or segment 1, you have a bucket where there is mass confusion about AI. Is it peaking? What is the impact going to have on software companies or data companies? What leverage do you have as a company to AI? And I think that analysts don't really know. I think there's this whole theme into or thematic investing, factor-based investing. We have all these ETFs and levered ETFs. We have a memory ETF now called DRAM. And all of these are just buckets, and these companies are placed into buckets just as like inventory would be placed into a shopping basket. But it's just thrown into the basket. You have no idea what you own. You said, I need food. And so you have Oreos and lettuce and tomatoes and meat. And it's like, wait,
what am I cooking with this?
Yeah. Some of it has to be refrigerated and some of it's actually going to be edible and some of it's disgusting. And I think that's kind of what the market's sorting through. And so you have a couple chip companies, ST Microconductor and Texas Instruments. ST Micro has been one of the rippers, but they have a big personal electronics business, and that business hasn't done well. They're getting smashed this morning, down to 15%. Texas Instruments is performing well. I think that they're just kind of a sell on the news event there. But then you have some of these big companies, ServiceNow, and Google specifically. Google is supposed to be a beneficiary of AI, or is it? Or is it just spending a lot of money on it? And I think that we've kind of oscillated back and forth, the market has, in terms of thinking about it. What we've seen is they haven't accelerated advertising growth on an organic basis. The underlying business of advertising is doing pretty well, and so they're benefiting from that, but they're not seeing incremental revenue from AI. Meanwhile, they're spending gobs and gobs of CapEx on data. In fact, they don't even have enough data center capacity that they're leasing it from SpaceX for 6 months and it's going to massively hurt margins over the next couple of quarters. So at Google, you're seeing higher investment and you're seeing pretty lower profitability actually in the near term, and people
and no revenue story that would get you fired up.
Right. You have a cloud business that is generating total revenue, not profit. That's a quarter of the CapEx spending.
Yeah.
So you're not seeing leverage there, and I think that's an issue for Google, and they don't really have a vision. They didn't outline the vision on the call. A lot of it's generalities. They have this chip that a lot of people are very excited about. It's called the TPU, the Tensor Processing Unit. We've probably talked about it a lot on this call. It's supposed to really ramp up revenue in 2027, and then he was asked about it, the CEO, and he said, well, we'll see what happens with it, but I don't really want to get into,
we were once very excited about it. Yeah, it's the first round quarterback who's year 3, and he's taken some steps forward.
Yeah, it reminds me of when Google was coming out with their health business. Like they had this Google Health, and it was supposed to be, they were supposed to leverage all this machine learning, and now it's just kind of, they don't even talk about it anymore. No. So I'm curious to see what happens with that chip. But then you have ServiceNow that is getting swept up in this big sell-off and just is firing on all cylinders. They're performing really well. They are seeing accelerating revenue growth. People are pulling forward demand. They're seeing longer and longer contracts, like talking about 5-year contracts. They're taking share from Salesforce. They're taking share from cybersecurity companies. ServiceNow is very much embedded in the enterprise, and they're doing well, and they've made the transition very well. But Google, it just seemed like it was stumbling a bit. They've got a new CFO there too, which probably doesn't help.
So we get confusion on that front. We got trains coming.
Yeah, I mean, so the other bucket is, okay, so you got a bunch of AI stocks where people don't really know what's happening. Yeah. Some doing well, like ServiceNow, others doing poorly. Some people, like Google, others people think are going to do well in AI, but don't really have much of an AI business, like ST Micro. And then you've got the businesses that don't have anything to do with AI, that are just rumbling
Just
along.
cruising.
And the rails are doing that for sure. CSX here on the East Coast up 4% pre-market. Fairly well expected, but they raised guidance for the year. They're seeing a lot of road to rail conversions. And they're able to absorb that capacity. The big knock on the rails for years has been, for really decades, has been that you can't move a ton of stuff on trains. Like theoretically, you feel like you should because you just add a car and you just
Keep going.
set it on. But handling that incremental capacity has proven difficult in the past. But they're doing a better job about this now. Norfolk Southern also benefiting to a lesser extent. Union Pacific was surprising because they are more transcontinental, so they're going to be on the rail regardless. There's less opportunity for road to rail conversions, but they're doing well. And then you have a lot of other industrial stocks that are doing well. Raytheon seeing tremendous growth in their Collins Aerospace unit as airplanes take off again. And then you have United Rentals doing well.
Raising guidance again.
Yeah, I mean, just great execution, higher EBITDA margins. You have some companies that are in an improving market that aren't executing well, like Dow. But Dow just got a new CEO on July 1st. I'd kind of put that one to the side and say, look, at the end of the day, the underlying economy is improving. If you look at Graco had, I think, 28% backlog growth year to date. The vast majority of that has happened in the last 2 weeks.
Yeah.
Things are rumbling in the economy here, and it's doesn't have to be AI. And I think that's really heartening. I think a lot of people might be concerned about it's just an AI market, and that's certainly what it felt like for May and June. If you didn't know Micron, I mean, I wrote a long email to a client yesterday. I really put a lot of thought into it, and we did a lot of work on our end over the last couple of weeks trying to look at the systemic nature of what happened in May and June as it relates to the memory companies and the concentrated nature of the market. And my conclusion was essentially there's other places we want to evaluate what happened, but thankfully right now the market's kind of going more in our direction in terms of broadening out, and that certainly helps us. There are certainly companies that aren't executing well.
Yeah, there's plenty of those. IBM flat. I mean, obviously we got the pre-report last week, so not necessarily a surprise there. Lockheed moving up a bit. Honeywell moving up a bit. Tesla down 6%.
Yeah, there's a few companies that need to just kind of get it together, and I even put Lockheed. I know they're doing well this morning, but I put Lockheed in that segment as well. They only raised free cash flow guidance because they cut CapEx. Tesla needs to get it together, though.
Yeah.
Their margins got smashed this quarter. So an interesting thing about Tesla that I didn't realize before, they book revenue and essentially based on interest rates. So when they sell a vehicle, there's a list price, and then they buy down the interest rate to finance it. So basically give you 0% financing. And they book that as that buy down piece gets netted out of revenue. So when interest rates go
high
up,
and they've got to buy it down more,
it's a bigger negative on the revenue line. So that hurt revenue and it hurts margin. And that really hurt their numbers this quarter. They also spending a ton of money on investments, and they pushed out Optimus further. They also bragged about Robotaxi ad nauseum. Over the last year, they've had 380,000 miles, which sounds like, man, that seems like nothing. A lot of miles, but it is nothing. Yeah. I mean, like, if you think that robotaxis really should be going 24/7, I mean, what is that? 10 cars?
Yeah. I mean, I think of I drive very little. I probably do about 8 to 10,000 miles a year on my truck. They've done 38 trucks worth, so not necessarily all that impressive.
One thing to note, I would note on Tesla is that, and I didn't think he was going to answer this question. The question was, any tie-up with SpaceX coming? He says that it would make sense. And he had the lawyers there and everything, so he wasn't going to give a ton of detail. But he said at some point it probably would make sense because to run a robotaxi fleet, you need connectivity worldwide. and Starlink can provide that. And so there's some level of rationale to have some vertical integration. So I would not be surprised to see a more SpaceX Tesla tie-up coming forward.
Yeah. And then we've got companies like Avalon Bay just continuing to tick along. Kinder Morgan basically flat. How would you characterize these guys?
Yeah, this is good news for Avalon Bay. It's a good ballast in the portfolio. It's a REIT, apartment REIT, in some good locations. They've been hit because of interest rates. And so if they can have any stability at all, that's pretty impressive given where interest rates are. And they are definitely showing that. So that's good news there. And then one new addition has been Quest Diagnostics. I think we've talked about it on this call. But they're up 7% pre-market now, seeing a lot of growth as people take healthcare into their own hands and get tested. Seeing a lot of growth from the physician channel, from the consumer channel, less from the government and insurance channel, and that's good quality revenue growth for Quest Diagnostics.
Yeah, and also quality as it relates to fitting into the portfolio with so much uncertainty in healthcare and so many challenges there that exist, given the portion of payments coming from essentially one source to have somebody that's actually growing a diversified revenue channel that's more consumer facing directly is positive.
Yeah, I mean, it's a great point on the portfolio side. Like, we want to create bulletproof portfolios for clients. Yes, we want to have upside leverage when these markets happen. Frankly, there will be times like we had in Q2 when the market just absolutely rips on. I mean, I was looking at numbers yesterday. SanDisk was up 292%, which means it was up 3.9x in a quarter.
Yeah, it's crazy.
And you know, it's difficult to keep up with that in a diversified portfolio where we want some different names. But the more Quest Diagnostics we can have and just chip away. Here's 6% there, 3% there, 4% there. It starts to add up over time. And if we're in enough of those places, we can play kind of the tortoise to the hare and be okay.
Yep. Good stuff. Awesome. Thanks, Ben. We'll wrap it up there. We'll be back tomorrow. Y'all have a great day.